Hey guys, thanks for stopping by thetradinganalyst.com. This is Taylor. We're going to take a look here at several stocks that I think are going to make a big move in 2020 and in the next few months here. So I'm going to start off with Amazon. I'm going to touch on the monthly chart and then I'm going to break it down to the daily chart as well. So it's really important. We're discussing the monthly chart. This is 5 years of action here on Amazon. And I really want to stress something to you and say that Amazon is extremely coiled. Okay, it's very, very coiled. What does that mean? It means that it's been in a really tight range and it hasn't really done much in really the last year or so. Okay, going back even more than a year. All right, basically 2018 was sideways trading right here. You can see we traded within this range, basically here to here. Basically been trading sideways in that range, okay? Now if you break it down even closer, we've been in an even tighter range, okay? Right here to right here. That is such a tight range. Now, why does it matter that Amazon has been trading in such a tight range? Well, typically, after a tight range, a consolidation period, you see big moves in either direction. Could be up, could be down. Now, Amazon is in an uptrend. Okay, it already had this big dip in 2018. It had its chance to break down. So I think that move is going to be to the upside. Now, after trading sideways for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 months of sideways trading, if and when it decides to break to the upside of this, I think it is going to make a massive, massive move, something that we haven't seen in quite some time. You can see here, I'm going to remove those lines. The last time we had a similar sideways trading action was back here in the middle of 2017. Okay, you can see that we traded sideways here, right there. Okay, this was for 1, 2, 3, 4, 5 months. And on the 6th month, we broke out of that range. You saw a big move. We doubled in price, went from about $900 all the way up to $2,000. That's a 100% gain on a stock that most people, and that's in just a year's time. All right, so most people don't think that big cap stocks, blue chip stocks like Amazon or Apple or Google can give you massive gains, but they're very wrong. Okay, Amazon doubled in price in just that year's time. That is a massive gain. And now this was 5 months, about 5.5 months of sideways trading. Right here, this is 10 months right now. It could be, well, it probably won't be. It'll probably be earnings is coming up in about a couple of weeks on the 27th, I believe, of January. And that most likely is going to be the catalyst that busts us higher, because that's the catalyst that busted it higher right here. So I'm assuming since it's coming up, it most likely will be the catalyst to move it higher. So we've got 5.5 months, and this doubled in price. Now we've got 10 months. So that's more than double the amount of time trading sideways. So what do you think it can do from here? I think it's very realistic that Amazon could hit 3,000, maybe even 4,000 within the by the end of 2020. Okay, we've got not only that sideways trading range, but we've got this nice little pattern here. Okay, just a little flag pattern, and you can see again it's been basically just trading within this pattern here for quite some time. All right, this is just a very massive bull flag type pattern, and we're just now peeking our head over it. So that's Amazon. I'll discuss the daily chart really quick. So you can see, again, traded sideways here, for many months right there. And we just now broke out of that range. Okay. I do want to note too, mention that Amazon is now my current largest holding, individual holding. We have more money in my S&P 500 trend following strategy at the moment, but as far as individual stocks, Amazon is our largest holding by far. I manage money for obviously myself, but also for other people. I have clients that I manage money for. If you're interested in that, let me know. So yeah, Amazon, very, very nice setup here. I think that once earnings gets out of the way, I think it's going to be a pretty big mover here, and that's in a couple weeks. So that's Amazon. Next one I want to touch on is AYX. Now AYX is one that has the potential, okay, this is a potential play. I do not currently own this, but it's a potential breakout here. Okay, if we can clear this resistance right there. Okay, so if we can clear about 114 on a closing basis, I think that AYX can head higher. Very similar to Google in that it was trading, we've basically been trading sideways here since September. Okay, sideways, and it really had its chance to break down. Right there. The other thing I want to note too is the volume on AYX. All right, the volume. Right here, we had this massive volume down here. Boom. But what happened after that? It bounced. Here's another big volume day. Bounced right there. We did get some heavy volume right here, and it headed lower. But notice here, we headed lower, and this is one of the biggest volume days ever for this stock. But notice, what did it do after that? All it's done is head higher after that. So maybe a lot of people bought on this day. This is, I think, the heaviest volume day ever. Yeah, it was. Aside from the IPO day, this was the heaviest volume day ever, and now we're currently above that price. So it had its chance to break down. In fact, we are actually currently short AYX. I just want to throw that out there and be completely honest with you, because we did get short. Where do we get short? I think over here. I forget where, but it is currently a losing position, and it most likely will be a loser. But if and when we break over this resistance, we will flip long. Okay, we will flip long because of all the reason I mentioned, and I think that that's what will end up happening. Okay, so it had its chance to break down. We have all this volume. Okay, all this volume marking the lows, and then not only that, these volume bars marking the lows, but we also have a little pickup in volume right here on the way up. Okay, so I suspect we're probably going to see some big volume green day breaking over that resistance, and to me that would be a great long signal. Okay, overall, if you look on AYX, going back several years, this stock is in a massive uptrend. Okay, this stock is in a massive uptrend, so it had its chance to dip right there, and now we're looking to bounce. All right, so those are my thoughts on AYX. If it can clear this level here by a little bit, I think it can head much, much higher. Maybe even break back up to, the 140 highs, something like that. But we'll just trail our stops on that and see how far it can take us. So that's AYX. CRWD is the next one that I wanted to cover. So CRWD, this one is now my current favorite new position. Okay, it's not the biggest position because Amazon is just a lot more secure. It's a big blue chip stock. CRWD is an IPO, a recent IPO. I still think it has massive potential. It's, like I said, my favorite stock, but Amazon is just a lot safer. So that's why it's our largest position. So CRWD, what I want to point out is that CRWD has basically been trading sideways here within this range for about 3 months. 1, 2, 3. 3 months of sideways trading. All right. Now, what I want you to turn your attention to is this action right here. Okay. The last month, we've been trading in a super tight range right here. Super, super tight. I mean, there's nothing else you could describe that with other than sideways trading. Up, down, up, down, up, down, up, down, up, down. Very, very tight range. Now, not only that, but the key here is the volume that you want to look at. Okay, so we didn't have heavy volume on any of these days or any of these days, but boom, right here. This day right here, massive volume. Next day, big volume as well. The next day, big volume. All these days here, if you look at the average volume over here. This is like 2 million shares, 1 million shares, 3 million shares, something like that. But over here, we've got 10 million, 8 million, 7 million. All of these days right here are well above the average volume here. So we're seeing a ton of volume while it has just traded sideways. Same thing here, big volume, big volume. Now, my analysis of this is that a lot of people capitulated, okay? Sold down here. And buyers were just scooping up those shares, and not enough to push it higher, but just enough to eat up all of those sellers. So we got rid of all the sellers here that are capitulating here at the lows. This is how it works, okay? Retail, they sell at the worst times, okay? They sell at the lows. They're tired of CRWD not going anywhere for themselves, and they're selling out. But smart money and big money are just sitting there and scooping up all the shares, okay? So it's trading sideways right here. And then finally, on this day, I believe this was Friday of last week, we had a big, huge volume day right here as it tried to peak over that range. And the key here, and this is why it became my favorite new stock, was yesterday. Yesterday was a had massive implications. And that is because we, broke out of this sideways range, but most importantly, we did so with the biggest volume day ever for this stock. Now, normally that would not be that big of a deal with this being a new IPO, but the fact that we surpassed the IPO day volume, if you look here, here's the IPO at about 19 million shares, okay, 19 million shares. We surpassed that, okay, we did about 22 million shares, almost 22 million shares here on this day. It is super rare to surpass the IPO day volume. Again, super, super rare. And when that happens, you better pay attention, okay? And this is a big green day, okay? This isn't a topping tail or anything like that. Ton of buyers. So I think this is the beginning of a massive move for this stock, all right? Another thing, too, is we broke over this downtrend line. There it is. Rejected, 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 and then boom, we broke over that range. So we've broken over that downtrend line, we've broken out of this super tight consolidation range, and my bet is that we are also going to break over this resistance out of this big sideways trading range, okay? So it hasn't even gotten started yet, okay? We're going to break over this range, $60, and when we do, I think it can head into the 70s very easily and probably even higher than that after that. Volume is the key here. This isn't just some trading pattern. We are seeing a ton of buyers just in this action right here. That's sideways trading, okay? But then, top it off with this massive volume, the biggest volume day ever on a breakout day as it's bottoming. This has massive implications. Again, it's my favorite new stock. I think that it's going to head much, much higher. Now I want to focus your attention here. This is the portfolio tracker that we use here at thetradinganalyst.com. It tracks all of our closed out positions. And these are the statistics that I'm showing you right here. I can't show you the rest of the sheet because it lists some of our open positions, and that is for members only. When you sign up and you join today, you'll be able to get access to the rest of that sheet and see all of our open positions. So as you can see, the average win here is 50%. We trade mostly options. About 85% of the trades we do are for options. About 15% of the trades that we do are for stocks. If you don't trade options, what a lot of people do is they'll use our option alerts to trade the stocks. For example, if we alert CRWD call options, what these people will do and what you can do when you sign up and you join today is they will buy CRWD stock, common stock, and obviously the gain won't be the same exact, but they'll be able to capture the same upside move that we will be capturing with the options. Okay, so average gain here for all of our alerts, 50%. Average loss, 33%. So the average win is a lot bigger than the average loss. The next statistic that I want to show you here is the average length of trade in time frame, and that is 10 days. So that means we'll enter on day one. Most of the trades fall around that 10-day mark when we close it out. So what that means is that, again, some of these trades can be 3 days, some of them can be up to 45 days. It just depends on the specific trade. Typically, our losers are much shorter because, again, we keep our stops tight, and our winners are the ones that last for up to 45 days. So it just depends on that typical what we're seeing there. So what that means is that you can participate in these trades no matter what kind of lifestyle or career or anything you have. If you got a full-time job, part-time job, a student, stay-at-home mom, stay-at-home dad, or if you just have a regular busy life like most of us do, you're going to be able to participate in these trades because, again, they are longer-term or medium-term swing trade positions, and you don't need to be sitting at a desk or a computer all day long because I text these alerts in real time with exact prices for the entries and the exits. Okay, so all you got to do is have your cell phone, like I do right here, and you'll be able to participate in these trades. You can see the average win here in a dollar amount is over $3,000. The average loss, $1,500. So the average win is more than double the average loss. And it's important to note that we're not just handing these alerts out with the exact buy prices. We're also recommending position sizing as well, because it's not smart to use the same amount of capital on all of your trades. Sometimes it's smart to risk more money on your higher confident trades. We do that. That's how our average win is so much larger than our average loss. Okay, and it's also conversely smart to scale back and not put as much capital at risk on your riskier trades. And we do that as well, and that is how we're able to keep our losses very small relative to our wins. Now, what matters here is the total profit, okay? The total profit of the last 2 years. We've been using this portfolio tracker for 2 years. Total profits following all of the trades, the wins, the losses, the break-even trades, everything. Total profits, $319,000, $181, okay? $319,000. That's not an account value. This is total profits following all of these alerts. And when you sign up and join today, you are going to get access to the alerts that I've been sending out for 2 years. So I'd encourage you to sign up today if you want to make consistent returns. We're not talking about a lucky day or a lucky week. This is something we've been doing for month after month, quarter after quarter, year after year, putting money in our pockets and the pockets of our members and subscribers here at thetradinganalyst.com. So sign up today and you're going to get access to these alerts. I'll start sending you these text alerts as soon as you sign up and join. I hope that you make that decision for yourself, and I'm looking forward to helping you grow your account. I'll see you in there.